Hello and welcome to myfinancesteacher.org. In this video, which is just for the members on myfinancesteacher.org, we're going to talk about the general stock market. I'm happy to let you know that yesterday on Friday, S&P 500 has finally reached that target that we had based on the previous low on the 28th of February. S&P 500 has also reached its 50-day moving average and closed slightly above that 50-day moving average. And a few days back, on the 9th of April, S&P poked or just touched the upper range of the Bollinger Bands. In this scenario, what I want to do now is I want to pull up my stop loss closer to the ongoing price. And for my trade, I'm actually using SPY. We're going to talk about SPY in a minute. For now, let's have a look at more details of S&P 500 itself, looking at the duration of the cycle. The ongoing daily cycle has been going on for 25 days. That's nearly a month. These cycles usually last for about a couple of months, I would say, for S&P 500. So on one hand, we're approaching the midpoint of the cycle already. There is also a chance that S&P 500 just trends downwards for another month from here into the short-term daily cycle low. So approaching this midpoint of the cycle is one reason I want to bring my stop losses tighter to the ongoing price. But on the other hand, I'm probably not going to sell immediately as the markets open on Monday. There is still a chance that S&P 500, say for example, retests the 200-day moving average, since it's already closed slightly above the 50-day moving average and slightly above that recent low on the 28th of February. Next, looking at Fibonacci retracement numbers, as I mentioned many times in my videos, 38, 50 or 62% retracements are the most common ones, and the 62% retracement is exactly at 2900 on S&P 500. And that's also a round number, so there is a chance that early next week S&P 500 continues upward just a little bit, just marginally, before possibly turning down into the daily cycle low over the next several weeks. One more thing to look at for S&P 500 is CNN's fear and greed. We see that the fear and greed index is at 44, and about a month ago we were at 5 at extreme greed. So the markets are still a little bit fearful, but they're pretty close to neutral, where there is not much fear and not much greed either. But in the ongoing bounce, with all of the economy being shut down and with millions of people getting unemployed, I don't think we are going to see S&P 500 shoot for the stars anytime soon. So I don't expect the fear and greed index to go too much into the greed area. So for a short while, S&P might actually top somewhere around 44 to 50 for this fear and greed index. That's where I want to get out of the market and possibly jump back in a little bit later once this index is a little further into the red territory. Another thing that I want to notice on S&P 500 is this gap between Thursday and Friday numbers. The gap ranging from around 28.15 to about 28.25. Within the ongoing daily cycle, there were gaps that haven't been closed yet, like this weekend gap, for example, between the 3rd and the 6th of April. But that was early in the ongoing cycle, when there was a momentum for price to continue pushing upwards. Now we are 25 days into this cycle. We're bumping on the 50-day moving average and 62% retracement. So there is a high chance, I think, that this gap is going to be filled over the next several days. So in the very short term, early next week, there is a chance S&P 500 retests this upper range of the Bollinger Bands again, or maybe even retests the 200-day moving average before going back down, filling this gap at 28.20 and sliding down into the short-term daily cycle low. So this is my outlook. However, remember, nobody knows the future, and there is an outlandish chance of, say, the Fed coming up this weekend with something crazy again, pushing all the markets higher. Who knows? So for that reason, what I want to do is I want to place my stop losses tightly enough, maybe sell a little bit of my position to take some profits, but I also want to let at least some part of the position in S&P 500 to stay where it is unless the stop losses are triggered. So talking about those stop losses, let's have a look at SPY. The close on Friday was above 286. The gap between Thursday and Friday is somewhere around 280 and 282. So if we drop somewhere into the top range of that gap, say somewhere between 282 and 283, that's where I want to have the stop loss triggered and get out of the stock market for a while. So that's our plan for S&P 500 for next week, as well as over the next several weeks. Let's see what happens. For now, I wish you a nice weekend and good luck in your trades.